Oh, now we're live.
Here we go. See, we're live. It's official. Hey, Jeff. How's it going, buddy?
So, oh my God. So I started the last podcast by pointing out to the audience how you messed up starting the podcast. And I need to start this live stream letting everyone know that Jason insisted on talking to me for about a minute while I told him we weren't live, telling me we were live. And in fact, we were not live.
No, we were live. It was set as private, though.
We were live for just ourselves.
For just ourselves. That's it. All right. Well, let me say this for those of you that are listening to the recording. Welcome to the Investing Unscripted First Friday live stream that, as usual, is not on the actual first Friday. It's the second Friday of the month. So those of you that are listening to it live, which includes one Sina Hasuna so far, and a bunch of other people that are joining in, we do this every month, usually the first Friday, sometimes the second Friday, occasionally a random Saturday, depending on how our schedules. Hey, we're busy people, right, Jeff?
I'm not sure about that. I just, I have to be honest. We could not have picked a better name for this thing that we do once a month. Like we picked First Friday and we thought to ourselves, it'll be always on the first Friday. And then it's become even more funny, I think, that it's often not on the first Friday.
Yeah.
On brand. We are so on brand when we're trying not to be, or when we're not even trying to be on brand.
Yeah, no, that's exactly right. So like I said, I see Sina here. I see some other folks logged in viewing too. They haven't started to comment yet, though. You can go in the chat and YouTube and chat with us if you're watching it live. We definitely want to take questions. We always take questions when we do this, but we've got some planned topics as well. Jeff, where do you want to start?
Well, I don't know. We just did an episode on market vibes, so I don't necessarily want to start talking about that, but I do have a question for you.
Yeah, okay. That's the episode that comes out. Was that this week or that's next? No, that was this week.
That was this week. Yep. Here's my question for you, and I want our live viewers here to chime in, and anyone listening later, I'd love to hear your thoughts on this too. So we had two huge news items this week outside the world of investing, just news items. One was this terrible plane crash in India, and one is the currently, as I'm saying, this ongoing, it looks like start of a war between Israel and Iran.
It continues to escalate. Yeah.
And those are absolutely newsworthy things that people need to be talking about. But this is my personal thing. I get a little bit annoyed when people who work in the world of investing immediately before anything has really even been settled start to talk about the economic or stock impact on this, right? So People were talking about Boeing stock minutes after that terrible plane crash, which seemed just sort of tasteless to me. But beyond that, if I'm going to take my personal views out of it and just think about it from the perspective of, is it a stock story? I understand the perspective of in the sense that the stock has gone down, yes. But on the other hand, we don't know what caused that plane crash yet, right? It's almost like no one talked about 9/11 as a Boeing story, right? You know what I mean? So I don't know. I'm a little bit hot about this right now. It's gotten on my nerves, and it's the same thing with the strike overnight on Iran. It's like oil prices down, gold up. Okay, but I don't know. It's a war. Can we just wait a second before we start talking about all of the economic stuff? I don't know. This is my hot take at the moment. I'm happy to be told I'm wrong, but figured it'd be fun to get people's thoughts.
Yeah. So just real quick, one of my favorite handles, Jacob Donkey Butt 10,
excuse me,
is in the chat, says I'm back. It's good to see you back. It's been a minute since we saw you in the chat on the live stream. So I'm just going to leave that hanging out there. But yeah, one of my favorite handles. Love it. So I'll push back a little bit, Jeff. Where I take issue with it and agree with you wholeheartedly is when the human toll is completely left out of any of the context or the story, right? I think financial journalists have a responsibility to cover these sorts of stories. To some degree, right? There's an obligation. You can't just not report anything about it. But I think there's also an obligation sometimes around the human impact of these things that just gets kind of skipped over. And it's immediately here's all the bad stuff going on with this company over the past however long the stock is down, as if to interrelate all of the crap with the 737 MAX and the broken culture at the company with the hundreds of people and the thousands and thousands of people that know them and that are their family that have lost loved ones. As if all of Boeing's bullshit in the past is somehow related to what's happened today or yesterday, right? That is absolutely inexcusable for any media company to do that. So I agree with you, but I will say that that financial media does have an important role in talking about these things. If nothing else, just to say, we don't know what has happened, right?
But all that, I don't know. I do see that side of it a little bit, but when the coverage is, plane crash in India, hundreds dead, Boeing stock down 3%, like, I'm sorry, we're still dealing with the crash. And again, what if a week from now we find out the plane was fine? There was a medical emergency with the pilot, or it was an air traffic controller issue. Like, I don't know. Obviously we don't know any of that yet. Then it's like, so why did you even mention Boeing stock? I'm a little bit less annoyed at like the oil prices are up because of the war in the Middle East story, because I feel like, I don't know, that just sits differently with me. Like that is an impact we know is already happening and will happen, because that's what happens every time there's conflict in the Middle East. There's been conflict in the Middle East for 2,000 years. I just was really bugged by the Boeing thing specifically.
I think there were some specific stories that were just kind of tone deaf that may have hit you. I mean, I'll say this. I have a friend.
Congratulations.
Yeah, that's pretty exciting. That's not the news.
Oh, I'm sorry. I was just really happy for you. Finally, it happened.
Well, it's not true. I don't really have any friends. There's a guy that I know that texted me about this Boeing thing. And his text was, I sold puts on Boeing at this price because everything that I've read and seen so far is I don't think this is going to be tied back to Boeing. I think it's going to be pilot error, that kind of thing. And selling a put, you put yourself in a position that somebody else can force you to buy the stock, right? So the downside risk here is if this is a Boeing thing, this guy's going to get skewered and forced to buy shares at or either that or buy back the put and lose money. Either way, he's losing money, but he's making a calculated bet that what we do find out is that it's not a Boeing story, and he's going to get the premium that spikes because of the volatility in the stock and the uncertainty and the speculation, and then he's going to make a nice little profit. I'm curious, what's your take on somebody choosing to take advantage of the market's movement to do that?
I'd rather not say.
Okay. All right. I intentionally painted you into that corner.
I don't mind saying it. Like I think it's a little gross personally, but
yeah,
I understand why someone would do it, because this is a little bit beyond the pale for me, but like I think this goes back to the age-old question that you and I have debated a bunch of times, which is, do you make moral decisions with your investing that keep you out of situations or stocks that you disagree with their business practices? Like there's a lot of people who don't buy tobacco stocks or gambling stocks. Or do you just look at it as, I'm going to make as much money as I can, however I can, through legal means, and then I'll use those profits to do good in the world, right? Yeah. So I guess the charitable view of a situation like that is, while I wouldn't do it because it just seems gross to me, if it works out and you make a lot of money and then you do something good with that money, donate to a charity, I don't know, something. Okay. Like I guess I could see that side of it. Just, I don't know, not my cup of tea personally.
Yeah, no, I get it. And where I come down from an ethical and moral perspective is, generally if the business has economic moats and valuation, like all the things like that I look for as an investable company, all things created equal, if a company has all of those things, where I draw the line is I think companies have limited responsibility to prevent people from causing harm to themselves. I will not invest in companies whose products or services directly cause harm to all of their consumers, right? So for me, that's tobacco companies, right? Defense companies, I generally don't own because I've never really been compelled to own them. A lot of people are protected because of defense companies. A lot of people die directly because of the products that defense companies make. Casinos, I've had a lot of fun in casinos. I know a few people that have gambling problems, and I've seen lives destroyed.
But like, and I get everyone has to make that decision because it's a slippery slope. Like
Yeah.
if you want to play,
for me, the difference between a tobacco company and a casino operator is I see no good generated in the world by a tobacco company.
right? No, I hear you. I'm saying I agree with you on that one. But like the whole idea of like, where do you draw the line? Because you could make the case for gambling companies. What if you own a alcohol company, or what if you just own a beverage company that
I'm sitting here drinking a beer.
I know.
Yeah.
Or what if you own a beverage company that at some point also sells alcohol? I mean, you could play this out to any tech company, right? If you have an addiction to social media, or we can talk about the harms that Instagram does to teenage girls, and a lot of people own Meta, right? So you can play this out to the nth degree. Right. If you think hard enough, you can probably find a way that almost any company's products harms everybody.
Oh, absolutely.
I mean, like I love Costco, but they sell alcohol. It's like where do you draw the line? So I don't have that many lines in my investing. Like to me, it's less moral and more, do I want to feel good when that company does good?
Yeah.
And
right.
I just don't invest in casino or gambling stocks, not because I have this like moral thing against gambling. I mean, I've done the same thing everyone else has done. I've been to casinos. I've bet on.
I think you'd be bored to own those companies.
Well, yeah, probably, but it's more that I know that they do. Yes, there is the people do it to themselves aspect of it, but there's also the, they're marketing to people who have gambling problems. I mean, I've listened to enough podcasts and read enough articles about how some of these online gambling apps work, where, they know who the users are that are really likely to just be terrible at gambling and spend a lot of money, and they market to them. Right. So but I don't want to root for that. Like if I own DraftKings and it does really well, that just means a lot of people lost money. It's just not where I want to, like, I'm not excited to like root for that. So
I get that. We got a lot of good comments that have come in too. So one of my favorites.
I want to, let me start with Cena's one near the top here. I like this, Cena. We were talking about how we don't do the First Friday show on the first Friday. And he said, I call it First Friday. And I kind of like that. You have to read it though out loud. It's more fun if you put the emphasis on the question at the end.
Yep. Ken Taylor is referring to our wonderful listener, Jacob Donkey Butt 10, saying I'm back, and replied, a handle named after Donkey Back says I'm back. That's pretty good.
It's deep.
This Guinness is for you, Ken. Good to see John Dargan says I'm back too, ? That's pretty good. Who else we got here? John Denley, LDP.
So I want to shout out LDP. He said he finally subscribed to our YouTube page and got the notification, and he was only 10 minutes late this time. That's our kind of viewer.
Right. You know what they call that? They call that LDP progress. They call that progress.
That's right.
Yeah.
All right, we got to talk a little. Oh wait, I thought this was going to be a baseball. Was he talking about baseball here, Ken Taylor?
Oh, he's totally dunking on my Braves. Can't blame him. Can't blame him. Yeah.
Braves are terrible. I love it. I'm here for it.
I mean, they're not terrible. They're just not very good. They've lost so many one-run games. They've lost like 8 one-run games.
Yeah, they're terrible, and I love it. The market doesn't draw lines; it snorts them. That's good, Ken. Well done.
Nailing it. Absolutely nailing it.
All right, here's a serious comment. So going back to our conversation about where you draw the line morally with investing, Here's another good example from Jacob Donkeybutt. What about the situation in 2008 with many of...
It's Jacob Donkeybutt 10.
Sorry, forgot the 10. Who says, what about the situation in 2008 with many of the same banks that helped create the crisis by packaging and selling toxic mortgage-backed securities were bailed out? Yep, that's another example of
I
where
blame Moody's for that.
Yeah,
I'm sorry. That's Moody's and S&P.
So John Gallegos, I have to call John out. So he finds anytime he is online when I'm doing something, whether it's here or at the Motley Fool, he mentions Outset Medical, and I got to the point where I can't even like mention it anymore on the Motley Fool live stream because I think it's only an inside joke between like three of us. But John, you should
It's
know
pretty
that,
great too, because like I can guarantee that John is somewhere out there in the West, and you'll say it on a live stream, and he'll be like Yoda, sensing a disturbance in the force, and he'll just like log on to the live stream.
John, I don't want to give too much away, but I think you can expect some Outset medical content coming your way from Jason and I down the road. But it may only be available.
Holy shit, it's $20 a share?
Yeah.
I mean,
Wait, hold on. You got to slow down. They did a reverse stock split.
Yeah, if we split adjust that back down, it's 2, right?
Yeah. No, but listen, we're going to do something, but John, it may only be available behind the paywall at Patreon. So just something to think about, but we are going to talk Outset down the road. Yes, there was a reverse stock split, but it has actually done fairly well over the more recent term. I'm not looking at a chart right now. I'll look it up later. But
I'm looking at a chart.
I know this because my position went from being down 97% to being down only 91%.
So this is like a stock that has gone up since Liberation Day.
I'm telling you, man,
nearly doubled. Like it's actually more than doubled from the bottom in early April. I mean, the bottom was in March, but you know what I mean?
Yeah. Remember we joked, it might have been on the live stream. I asked you to guess how much my position was worth. I did it on here and everyone guessed it was like $47. It's like 90 something now. So,
hey, I want to just do this. I'm going to shill just a little bit. Lewis Brooks threw it in here. Says, hit that thumbs up. Lewis Brooks, by the way, a member of the starter position on Patreon. It's been a lot of fun chatting with Lewis over in the Discord. Lewis says, hit that thumbs up. I do want to ask folks, do us a favor, hit the like button on the live stream. That does help the algo a little bit. And maybe some folks will find us. So that'd be cool if you guys could do that. I'd really appreciate it.
Yeah. Speaking of thumbs up, like we have a lot of repeat viewers here on the live stream. We have our steady 10 to 12 people that are always here. Y'all should be sure that you've given us the 5-star reviews on the apps too, because we're trying to hit the gas pedal a little bit on spreading the good word about the podcast here. So it takes less than a second to hit that 5-star button. If you want to leave a review on Apple Podcasts, that's cool too. But I think the 5-star reviews are really what is going to help us. So while you're watching, you can open up on your phone, whatever podcast app you listen on, and give the 5-star review. All right.
Jen Roberts, she's currently distracted by the Cubs game, but she might listen a little bit to us. Jen, if you're listening, smash that like button.
Yeah. Smash it. Smash it. All right, let's do this next. Here's my other semi hot take. I think the delay on the impact of the tariffs is lulling the market and consumers and everyone into a false sense that everything's going to be okay. And that by the time we hit September, so sometime in July and August, I think the proverbial crap's going to hit the fan as it pertains to the actual economic impact of the tariffs. Tell me I'm wrong.
Yeah, but to tell you you're wrong, we'd have to go over to our Discord channel, and everybody listening would have to pay $5. I'm kidding. That we actually do have an every tell me I'm wrong window in the Discord channel on the Discord server. It's been kind of fun, but I'm torn on this. I'm torn in a couple ways. Number one, I'm torn because the market usually bottoms before like whatever's going on with the economy historically. And I do wonder if maybe there's just been a little bit of acceptance that it's going to be bouncy and rough. And we just kind of have to get through it. But that's probably BS. So I can't really tell you that I'm wrong. What I can tell you is that I think that there is a substantial cohort in the market right now that is saying the U.S. Court of Trade has said that either the administration is acting illegally by claiming that there's an emergency, which is what would give them the authority to use this law, right? This 100-year-old law. Because they're saying that the idea is that the conditions that constitute an emergency have been going on for decades, and no other administration has pulled that card, right? So they're saying either the administration is acting illegally because they can't use this law because there's no emergency, or the law, if this were such a situation and the law did allow them to act, then the law is unconstitutional because the Constitution explicitly gives the ability to tax and levy to Congress, and Congress cannot cede that authority.
It's trying really hard though.
But here's the thing, it's trying really hard by not doing anything. But what that court said is Congress can't not act, and then their lack of action means that the administration has that authority. So that's hear me out. So that's happened. Federal Appeals Court has temporarily stayed the court order that ordered the administration to immediately cease any attempts to pass these levies on. This is not the Section 232 or 301. This is not the specific ones that are based on national security, where the administration does have the ability to do what they've done. We've seen that with steel and coal and other stuff for decades and decades. So that there's precedent and that they can do that. But like the broad-based tariffs that have been put out there, right? So what's happening right now is that the appeals court has stayed the order of the Court of Trade while it is reviewing. It's asked for more from those who have petitioned the court, who filed suit, and also from the administration. And I think before the end of the month, it's gonna rule on whether it's gonna even consider the appeal, right? So if the appeals court considers the appeal, we've got another trial that it's going to go to. The appeals court could refuse to hear it and rule in favor of what the Court of Trade's already said. And if that happens, of course, the administration is going to immediately appeal to the Supreme Court, right? So we're months away from like any sort of resolution on this.
So I don't think we're ever going to get a resolution. So like, I hear what you're saying, but two things. One, there's other ways. I have a feeling he's going to find other ways to try to do tariffs.
Oh no, they're going to continue to try, right? They're going to continue to try.
But this is my point. Like, so this is why I think this is going to happen. We're going to get to a point where no matter what he does from now on, the impact of what was done is going to hit us, right? Because the supply chain takes so long. I just worry that once people start to realize like, oh man, prices are higher, things are less plentiful on the shelves, I can't buy as many toys for my kids for Christmas. It doesn't matter after that what gets rolled back. I don't think
that's going to happen, Jeff. I really don't. I think companies are going to have. I think companies probably have already capitulated to some degree. They're delaying things as long as they can, and they're going to be looking for windows to receive goods in these gaps. Like we got like a 20-hour gap last week, 2 weeks ago now, I guess it was, when the trade court issued its ruling before the appeals court stayed that ruling, and the tariffs went back into place. So like there was a window where companies could get goods in. I think companies are banking on there being opportunities to bring things in, or the tariffs being paused by the administration, the whole, the taco trade, whatever thing. Like, I think companies are banking on that. And I think investors are banking on that. I really do. I think that's why the market's staying high.
I think it's going to be bad.
Yeah, maybe. So here's my question. Here's the bigger question. What are you doing about it? What are you Like,
Oh, I went to cash, all cash.
he's lying. He's full of crap, guys. He didn't. But no,
This is
seriously, what do you?
so. I went back and looked because it feels like it's been a really long time since I bought any stocks, and uh, not including my normal weekly selling of options just for income. I have not bought anything in almost a month. Middle of May is the last time I bought something, which is a long time for me. I'm usually, like I've said before, the money hits my account twice a month. I usually buy something twice a month within a couple of days of when it hits the account. And I'm not purposely trying not to, but I'm not compelled to go do it. I'm not excited to open up the brokerage and look at my spreadsheets and think about what I want to spend that money on, which I've noticed about myself tends to happen when the market is very frothy, which it feels like it is right now. It's been a lot of green days, a lot of up and to the right, big recovery since the April 8th low after the tariffs.
Good band name.
Yeah.
Green Day.
Yeah, like I said it, so it's a good band name.
God.
But here's, but there will be a day, I'm sure, sometime in the next week or two when like I have the time and I'll gain the interest and I'll go buy some stocks. But I do slow my pace down when the market is up, and I am excited to buy more when the market is down. I think that makes sense to people who are still at like the stock buying phase of their investing journey. But I would be lying if I didn't say, part of me is thinking to myself, this would be a good time to see if I want to be the kind of investor that built up a cash position, because I'm typically have no cash position in my investing portfolio. We've talked about this. I'm not talking about my savings account, like emergency fund, that's separate. But there is a part of me that says, I don't really feel compelled to rush to buy anything right now. Everything feels sort of overvalued. There's nothing on my watch list I'm dying to buy. There's nothing in my portfolio that I feel that I have simultaneous high conviction in that is also a screaming buy. So why not just let the cash accumulate for a few months, especially if I feel like sometime this summer, maybe the fall, there's a chance things get dicey, the market turns in the other direction. Maybe there's other events that drive it down even quicker. And then I have a little cash to buy at a more opportune time. So that's, if I'm being honest, like that's where my head is right now. I probably won't do it. Like I said, I'll probably have a day where I have the time to think about it and I'll go buy something. But I have been considering, do I want to be the guy who keeps a little bit of cash to be opportunistic with? And I don't know. I'm kind of taking it day by day and just seeing where my vibes take me. What about you? You're not a consistent buyer anyways, but you've also accumulated a lot of cash, I think, probably more than you normally have, if I'm remembering correctly.
So I wrote about this a couple of weeks ago, over on Random Words. If you go to investingonscripted.com, it'll take you straight to the link. And what I wrote about was holding myself accountable, to the idea of cash. Is I've always, really the past probably 7 or 8 years, I've learned that I need to keep some cash because it keeps me from selling other stocks to buy things during weird market vibe periods. So that used to be 5%. I bumped it up to 10% for a number of reasons I won't get into again. I've talked about a lot. But that amount just continued to creep higher and higher and higher. And then now that I'm, over the past year, I've started using options more, particularly selling puts. I do it in retirement accounts. So when you sell a put in a retirement account, you need to have cash reserved to cover having to buy the stock if it gets put to you. So at one point, I think I peaked at, in terms of like the percentage of just my solo 401k. This isn't all the accounts. I have Roth, my wife's Roth, taxable accounts. So not all of those things, but just the one where I do the majority of my options trading, hit like 28% cash. A huge amount of that, probably 10 or 15% of that was cash to cover puts, right? So it wasn't available to trade anyway. And those puts are for income plus the yield I was getting on the cash. I was happy with that amount of cash, but I want to try to be around 10% cash that's just available to invest at any given time. And in my 401k now, I've got about 21% total cash. If you back out the portion of that cash that's reserved for option strategies, I'm down to like 7% cash because in mid-May, around the time that the market started to bottom, I deployed a pretty decent amount of cash. We're getting to a point now where there's a few stocks that I've circled in pencil that I'm thinking about selling for various reasons, just things that I've held for a while that I've just, because I'm so glacial about selling, that just things that I've held for a long time, trying to get to the point of, dude, have I rebuilt some sort of conviction here, or is it time to move on? In this kind of bubbly market where it's largely come back, I think this market down today, I think we're still within 2 or 3 percentage points of the all-time high. Those stocks have come back. But I haven't really seen anything with the business results that leads me to believe that I want to continue owning them. So I'm actually probably going to be back in a cash raise mode here in the near term, because I do think we're going to see more volatility later this year.
I mean, yeah, for someone like you who purposely tries to have whatever percent in cash all the time, like this, it seems like this is the time to build cash up, right?
Right.
So that it's there when and if we have another downturn. LDP has a good comment here about my prediction that we might see some rough seas in a couple months, saying, I think earnings are going to be the true indicator for the next 2 quarters. I don't know that I agree or disagree, but I actually am very interested to see that. One of the things that I was very wrong about all through the post 2020, 2021 exuberant market was that I think I thought we'd see a lot more companies have a lot more struggles during 2022 than they did. I mean, companies struggled, don't get me wrong, but I just felt like it would be worse. And it got me thinking, I probably underestimate a lot of companies' ability to figure out a way to always still make money. Like, which sounds stupid to say out loud, but like, you're not a successful company that sticks around for a really long time and grows to a significant size if you're not very, very good at finding ways to make money. And I think that's probably a little bit of your point, Jason. The counter to will we see a downturn is, these companies have probably been working really hard to find loopholes around and ways through the tariffs, right? I'm going to keep everything on a ship 500 feet away from the port. And then when there's a court order, I'm going to unload it, right? Like that kind of stuff.
Well, the 2 words are bonded warehouse, right? That's the thing.
Yeah.
It's as long as you haven't taken possession of the goods, you don't have to pay the tariff. So,
but I'm interested. I mean, we will see. I think the next quarter will be illuminating, and the one after that. Do we see margins compressed? Do we see profitability take a hit for some of these companies that are facing the tariffs already?
Yeah.
So that's an interesting thing to keep an eye on here. Ken Taylor, solid joke here. Jeff sells all of his individual stocks, now has a 1.2% cash position. That's good, Ken. That's good.
That's brilliant. That's absolutely brilliant.
Yeah.
So John Gallegos, not much I can talk about here, but I think it's worth just kind of sharing. If there's anybody that's listening that's on the live stream, maybe you can weigh into John. But back in 2022, took a portion of his portfolio and bought a basket of tobacco stocks, and says now he's thinking of selling them and investing in more high conviction companies. The bottom line for me is that I've tried to build conviction in these stocks in the past, because generally they're cheap. They're pretty much always cheap. So as a result, broadly, like with Altria for certain, you can lock in extremely solid dividend yields, right? Dividend growth has slowed a little bit there, but so that's one of the reasons. And like, it does a ton of share backs. I don't know that the story that's played out over the prior 20 years continues to play out going forward. And that's the biggest reason I've avoided them, besides the fact that they will kill my father when he eventually dies. He has COPD and pneumonia. And I don't like owning businesses that murder my parents. So
like, if you're going to draw a moral line, I think that's a good one.
Yeah. The irony, my dad has owned Altria for a long time.
Hey, to each his own.
Yeah. Yeah. But no, I get it. In his case, it's like, it's okay. It's different. It's different.
All right. I'm going to change topics here and issue an apology to you, Jason, because...
Is it an authentic apology? Or
no, it is, because at some point speaking into a microphone. I don't remember when. It might have been on the last. No, it wouldn't have been on the last live stream because that was in Omaha. I said out loud that my savvy trader picks were beating your savvy trader picks. We take turns. For those of you that are not
bad at math
subscribers, we take turns. We started with the same equal amount of picks, and then every month one of us picks. We take turns, and I decided to put it into a spreadsheet to see like whose picks were doing the best versus the S&P 500, mine or Jason's, and my results showed that I was beating him. So of course I gloated because that's what either of us would do in that situation.
100%.
And then as soon as we were off the recording, I noticed that I had fat fingered something. And when I corrected it, I was in fact losing to the S&P 500 and Jason was beating it. So I said I would issue an apology publicly, and I am doing that now. Now, to be fair, it's my pick next. So you're like one ahead of me. So I'm certain that that's why you've had more opportunities to beat the market.
So I want to point out that absolutely nothing in this conversation is Jeff acknowledging that I'm the better investor.
Well, so a good investor would know that gloating after only a year is an amateur move.
Oh yeah, no, the bottom line is
so the jury's out, Jason, about who's the better investor.
No, the jury is out on whether either of us are good investors.
Fair. Although we did have another bet a couple years ago. You bet me straight up Taiwan Semi versus NVIDIA from that day. I took NVIDIA.
Terrible decision.
And you took, let me see if I can find that one just while we're...
terrible decision.
While we're looking, I think I called that file Jason versus Jeff.
Yeah, that sounds about right. So while you're
here it is. Wait, hold on. No, I'm not changing the subject.
No, I just had something interesting we're beating the S&P by like 40%.
Yeah, the savvy itself, our combined efforts are very good.
Yeah, crushing.
So yeah, as of the day, I wish I had written the date down. This was a couple years. This might have been like 2022 or 2023. You bet me NVIDIA versus Taiwan Semi. I just want you to know that since that day, my pick NVIDIA is up 741%, and your pick of Taiwan Semi is up a measly 159%.
Yeah.
So
only, hey, we're all winners at life. That's what matters.
Yeah.
Hey everybody, we'll be right back, but first a word from our sponsors.
FinChat.io is the complete stock research platform for fundamental investors. They have all the standard financial data on more than 100,000 stocks globally. But beyond that, they have company-specific segment and KPI data on around 1,800 stocks. So for example, do you want to see NVIDIA's data center revenue growth? They've got it. Do you like to track Apple's iPhone sales? They've got that too. Or how about nights and experiences booked for Airbnb? You guessed it, they've got it. And they just added around 8,000 ETFs and mutual funds to the platform. The breadth of FinChat's data is truly one of a kind. I use FinChat every single day as I'm researching the stocks in my portfolio, specifically when I want to see how they're doing on KPIs that FinChat is famous for. So to get 15% off any paid plan, go to finchat.io/unscripted. That's finchat.io/unscripted to get 15% off any paid plan today. The link will be in the show notes.
Hey listeners, my name is Brett Schaefer, one of the hosts of the Chit Chat Stocks Podcast. On our show, we do comprehensive stock research reports, interview analysts, and learn from great investors. And we have coverage on stocks like Airbnb, Nubank, Mercado Libre, and many others. Plus, we cover all the hot financial news on our weekly investing power hours. We have episodes for all types of investors, and think if you listen to this podcast, you will enjoy ours as well. Follow the Chit Chat Stocks Podcast on YouTube, Spotify, or Apple Podcasts, and start discovering new investments today.
Yeah.
John Dargan, I don't want to miss this one. Jason, I heard you say that you've taken a position in TransMedics, ticker TMDX. Have you done a review of the company? I say a great company, successfully working towards a meaningful mission. I really haven't written about it, and I think it's actually a good idea. Maybe I'll write a little bit about it. So for those that don't know TransMedics, their core innovation They're in the organ transplant business, and their core innovation is their device that is really disrupted and revolutionized organ the transportation, getting the organ from the donor to the recipient, where historically you're putting an organ on ice, right? You're pulling it out of the donor quickly. And when I'm talking about things like heart, lung, kidney, liver, right? You got to move quick, and you're pulling those from a very recently deceased donor, and getting them to the recipient patient as quickly as possible to maximize viability, to reduce side effects, all of those sorts of things. So what TransMedics did was their founder developed a device that essentially causes the organ to continue to function while it's in transplant. So, or transit, I should say. So the result is far improved outcomes. Organs remain more viable for longer. The other thing that they've done more recently is they now own 21 aircraft. They bought an existing aircraft operation and converted it to use just to transplant organs. So that is another, I don't know if you'd really call it innovation, because there are other companies in the transplant business that own aircraft. But because of their, like, the front end with their technology is becoming the standard of care, having that with the vertically integrated operations and the logistics really has them positioned exceptionally well for growth. And I know some people that work there pretty well. They live in my town. It's close. We're less than half an hour from the headquarters, and they're extremely mission-driven people. And that was one of the things that really impressed me, is a few conversations with people that, they're not necessarily putting on an act, right? So you kind of get a feel for people, especially when you're standing on the sideline of a kids sports event, you're coaching together, right? You kind of get to spend time with people in those situations.
Yeah.
The interesting thing, Jeff, is it made me more critical of the business, and it took me about a year longer before I was comfortable in investing with the business. I dug in deeper. Go ahead.
No, I was going to say, it's one of those ones I want to root for.
Yeah.
I probably would have bought shares for now, by now, had you not done it, because now I'm convinced it's going to go down. John Dargan, great line here. One of you can be the better investor and still both be bad. That's true. Well done, John.
True. Well, that just means less worse.
Yeah.
So
maybe that's how we should phrase it. Who's the less worse investor?
Who
the
sucks
lesser
less?
of the evils.
So I'll say this. So the stock has really rallied. At one point it was in the 60s. Earlier this year, there was a big short report that came out late last year that I thought was absolute nonsense. And it just crushed the stock. And I bought the stock, and I used some options to do a few other things when the stock was down. So I got lucky with my timing, because I did not expect the stock to rocket back the way it has. I think part of that is we've seen some shorts exit their positions as the business's results have been very good, and GAAP profitability. They're not throwing a bunch of money to grow their fleet. My understanding is that they're not planning on buying any more aircraft right now. They're only running single shifts on most of their aircraft. So all they have to do to get more capacity is just increase the shifts that they're running. So there's a lot of ways they can continue to grow the business, including more approved applications for more organs to be able to use their system for transplants. So I'm not as compelled by the price right now. I mean, I think it's borderline expensive at this point, but what a business you want to root for.
Yeah, for sure. All right, let's grab the third rail and talk about Tesla. So the RoboTaxi event is on June 22nd, and I want to know. So here are your choices of what's going to happen.
Stab myself in the face.
So on one end of the spectrum, we have an actual newsworthy event that shows that they are actually ready to do this. That's like one option.
Are they going to have a leather guy in a jacket throw a lead weight through a window?
A leather guy in a jacket?
A guy in a leather jacket throw.
How many beers have you had?
a third of a beer.
You're light.
No, you
You're
know what I'm
lightweight.
talking about. You know what I'm talking about, right?
Yes.
The Cybertruck thing.
Yeah. All right. So do we see actually something real? Do we see a lot of hype and it's coming soon and like sort of like a kicking the can down the road? Do we see it delayed? What do you think we actually get on July 22nd? Because I'm in the mood for hot takes today. I've already predicted it, a market crash. I have a hot take on this, but I want you to go first.
I think we see a real functional vehicle.
But is it like, here it is, and it'll be on the streets in next week, and then it won't be?
I think because it's been so long since their original Cybercab rollout, because we're what, 2 years after that now? It's been a while. Maybe it was last year. It feels like 2 years ago. I think it's going to be real, and I think that the relationship that Tesla has with the state of Texas and with the city of Austin is probably strong enough that they are going to be able to operate in some limited areas. I think it's going to happen. I think it's going to have to happen probably with Tesla employees in the vehicles to start. In addition to the remote operators, because these vehicles, I don't think they're going to have controls in the vehicle. They'll probably be like a kill switch or something. And I think they'll have remote operators, and there'll probably be a Tesla employee in the vehicle. That's my guess. But it's probably going to be far more limited than they want. And I think where it's absolutely going to be a disappointment, because Musk said there'd be 1,000 vehicles within months. I don't think that's going to happen.
So I hope you're right. What I worry about, and this is my hot take, I worry that all of those relationships you just talked about with Texas, with Austin, with federal regulators who might regulate the ability to drive a car.
They're not. There's no federal regulation they have to worry about.
I'm just worried that this is getting the rush job, and that these vehicles will be on the streets before they should be or are actually ready to be, and that someone gets hurt. That's my concern / I would not be surprised if that's where this goes. Like I no longer have the faith that this will be done when it's safe. I'm worried it will be done on a timeline that someone has promised. So if what you said is true, if it's like limited, if it's with people in the driver's seat to start out, I'd actually feel good about that. So that's my hot take / worry, is that this is going to be not ready for prime time, but on the streets. I could also though see a scenario where they have a vehicle and they still find a way to punt a little bit, just because that's kind of what has happened. But yeah, so I worry that it's just not ready for prime time. That's my big concern.
Yeah, I don't know that they're going to throw it out there that quickly. I think as favorable as their Texas and Austin have been, because so much money has been brought into the state in tax revenues and employment opportunities in the local area, the local politicians are not going to take on the risk of something like that happening, where they're going to let Tesla operate too much too quickly. I firmly believe that, because it's all about incentives, and their incentives are to keep Musk happy, not to get their constituents killed. Because a happy Musk and dead constituents means you no longer have a job, and you're probably getting sued, and maybe even going to jail if you allowed things to happen, and you were derelict in your responsibilities to your constituents, right? So
yeah,
that is my thought, is that's the thing that holds it back, is incentives, that keeps it from becoming too much too quickly.
I hope you're right.
So,
I hope you're right.
Yeah.
Ken says he spoke to a Tesla AV employee, and his theory is that the RoboTaxi is basically R&D to make personal vehicles full level 5 autonomous eventually. I believe that. I don't know.
Absolutely.
I doubt that. I don't think that's the only reason. Like, I truly believe Musk feels like he's going to have 1 million RoboTaxis on the roads, and Tesla's going to make a lot of money off of it. Like, I believe that he believes that. I don't think it's going to happen, but I believe that he believes that. But if a happy secondary benefit of that is a ton of data that helps the regular Tesla fleet that people just own personally become fully autonomous.
Well, yeah, eventually it kind of becomes the other way around, because the data from full self-driving is directly, driven the result that is going to lead to the cybercab, right? That's all of that data has driven that. And eventually it does kind of flip the switch where you actually start having completely unmanned cars in these areas, where it's going to feed back the other way and eventually allow car owners to be able to monetize that. So we'll see. We'll see how it plays out. But
that's the part of the whole self-driving thing that I just don't think we ever get to, or I shouldn't say ever. I don't think we see for a very, very long time. I've said this before. I think Americans like driving too much to have enough people give it up to the point where this becomes the way people travel.
Maybe. I mean, it's.
But it makes sense for RoboTaxi.
It'll happen.
That's
overnight,
where I think we'll see.
It's going to take 20 years before it happens overnight, right? It's going to take a generational shift. So to John Denley's, I want to hit this comment before we move on, because I think it's spot on. A high-profile pedestrian accident / fatality could cripple this whole operation. Maybe. I think the yes part of that is we'll look at what General Motors did with Cruise, right? They shut it down. They closed it down. And of course they still use the IP with their own vehicles, but they shut down that commercial operation completely within a few weeks.
And that's the weird thing about
but Tesla's, go ahead.
When full self-driving started to become talked about, right? The two things that stuck out in my mind as I was reading about it were the fact that some cars are human driven and some are autonomous is really the wild card, right? In a world where all the cars are autonomous,
level 5
it's a lot safer because they all know what the other one's going to do. Now that's an incredible amount of bandwidth and compute, and can that be hacked? Who knows? But like theoretically, I understand that intellectually. Like if everything is driven by computers, they know exactly what everything else is going to do. There's less unpredictable things that can happen.
But all it takes is one monkey slinging poo,
right?
And the whole thing crashes.
Yeah, but if I want to take the pro self-driving car angle in like a debate, the thing to talk about, and no one wants to say this because it sounds like you're being insensitive, but this is the truth. Like, if you could show that self-driving cars crash, I don't know, 0.01% of the time and humans crash 5% of the time, you would pick the self-driving cars in a heartbeat. But that's not what's going to happen emotionally to human beings when a self-driving car kills somebody. Even though it's that many road miles in a human-driven car would kill a lot more people, right? It's just this weird thing about how we view the world.
Yeah. No, the story matters more than the data in our brains. There's no doubt about that. So we'll see how it plays out. All right, we got less than 10 minutes left. What else do we want to talk about here?
So I think it would be good to just quickly talk about our public-facing portfolio contest, just because we have some viewers here who are actually playing in it. So if anyone doesn't know, we have a publicly facing investing unscripted portfolio contest. You can get the link to this year's and last year's and the year before that's in any of our show note descriptions, including this one. But I wanted to make sure we talked about this for a very important reason, Jason, and that is that I'm beating you. So my portfolio is up 9%. Yours is down.
Let me full disclosure here. I intentionally, if you go back and listen to the episode that we recorded late last year where we talked about it, I intentionally made a decision for that contest to like bottom fish,
right?
Just like bottom fish companies.
Yeah,
I kicked your ass the year before.
Always talking about old shit. Always talking about old stuff. Yeah. Listen, you say you're full of crap because as soon as your portfolio starts beating mine, you will do the same thing that I'm doing. But the real reason I wanted to bring it up is I would encourage anyone who finds the spreadsheet, click on the audience members tab and just go through some of our audience members. That we got some people doing great work here, Jason. So one person who's beating me is Craig, who sent me a literal ETF. It's like 40 stocks. He's beating me slightly, but we got some portfolios up 38, 39%, 22%, 20%. couple of the people who we have on right now. Let's see who's on. Yeah, John Denley and John Dargan, who are on the live stream right now, both have portfolios. They're doing well. So, and actually, there's a couple like small portfolios. So we got Eric N only has 2 stocks, and he's up 21%. Caleb F just gave us Upstart as his portfolio. He put all his money in Upstart. That has not worked out as well for him, but it is pretty fascinating to click through, see how people are doing. And what they decided to do in terms of 1 stock, 2 stocks, 20 stocks, 40 stocks. And last thing I'll say, and I want to hear your thoughts too, if you have any, anyone who's playing along, anyone who has a portfolio in this contest, do check my work. This has become way more unyieldy than I was anticipating. I will not do it this way next year. But if you see anything wonky, a stock price that's wrong, a dollar amount that's incorrect, shoot us an email. That's the easiest way to make sure I actually fix it. Is by emailing the show. But yeah, fun portfolio, a lot of interesting stocks to look at. What jumps out to you? Anything?
Yeah, I mean, I love it when other people's just like rando portfolios do well and do better than the pros or the experts or whatever. I love that when that happens. I do want to also say that I'm absolutely stunned that my portfolio is essentially back to break even, right? I didn't think that was going to happen. I really didn't. It was brutal. It was absolutely brutal. And I have some cash here, and I made a massive mistake. And as I was allocating cash in my real portfolio in the real
you
world,
forgot about this.
I totally effing forgot about this.
I shouldn't have told you. I think if I hadn't reminded you that you left some in cash, you would have gone the entire year not realizing it.
Jeff, not only are you up, you're up about 9%. The S&P's up like 4% this year. You're doing a lot better than the market. So
right. And as we know, when I'm doing well, it's because I'm a good stock picker. And when you're doing poorly or well, it's because it's only been a few months.
Yeah, that's absolutely right. So Teo, it's good to see Teo here. My contest portfolio is an absolute travesty. Thankfully, it's not my actual portfolio. That's good. LDP, I agree with you. Just don't get the hype around Tesla and self-driving cars. Talking about Baidu already driving around cars in major cities for years. No news agencies talking about it. Well, it's China. So, a little bit less talking about what's going on in China. So, yeah, I think that's a zero-sum game though, largely. I really do. I think the idea that these are going to be massive profit drivers for automakers, I don't buy that at all. So, it's going to become a price taker's game where the competition sets the price. Nobody's going to have massive moats in that, I don't think. So that's where I stand on it. John asked, can we make changes in our portfolio? Yeah, you get a change every quarter. So
yep. Just email me what you want and I'll make the change with the closing price on the day you email me.
Yep. investingunscripted@gmail.com. And Jeff will be happy to make those changes for you.
All right. So last discussion point, Jason, we've got 2 minutes left.
Yep.
We are, I think it's safe to say we are now out of earnings season. Pretty much everything worth knowing about has reported their Q1 or whatever quarter ended in March or April.
We're not out of earnings season. We're just about to go back into earnings season.
Right. So we are in that in between. What's one stock that surprised you from this past earnings season, either on the positive side or the negative side?
I think on the positive side, seeing Upstart continue that trajectory that they told us. The market hasn't necessarily loved the stock, but they're on track to grow 50% revenue, 50% this year, and probably generate a bunch of free cash flow. Seeing that continue to develop, even with all of the concerns around interest rates and economic pressure, that to me is a big positive. What about you?
So mine is actually one that I sold several years ago and hadn't paid attention to until I had to talk about it on the full live stream. And it's C Limited, ticker SE. It's a South Asian e-commerce and fintech and gaming platform that I sold out of frustration just as it was becoming profitable. And ever since I sold it, the profitability has just gone up and to the right consistently. And now it is solidly profitable and has done very, very well. And it got me thinking, I want to start being that guy who keeps track of positions I sell, even after I sell them, to see if I missed the boat, was too impatient, if it's worth getting back in. I'm not going to get back into that one, but it did teach me that lesson that maybe I should keep track of the things I sell after I sell them and see what happens after that.
Yeah, I like that. I think that's smart. That holding yourself accountable after the fact is always a really good idea. Jeff, we're done. This is it, right?
We did it. Wrap us up.
All right, guys. Hey, guys, everybody watching, you did it too. Be proud of yourself. Go have a drink. Buy yourself that drink. I'm not buying it for anybody. All right. This is the end. This is the part where I say thank you guys for being here. If you are listening to the recording, usually this is the first Friday of the month. Sometimes it's not. Keep it on our socials and our Patreon and investingunscripted.com. We will tell you in advance when we're going to have it. So be sure to check that out. Check out that Patreon too, the paid subscription. We're having a lot of fun in the Discord. We'd love to get more people to give us $5 a month and then have fun with us and hang out with us in the Discord. And
yeah, the Discord's great.
It's a lot of fun. It's been really good. So that's that. But just remember, we're happy to engage, give our answers, give our thoughts about all of these things, about investing writ large, but it's up to you. It's up to you to find your own answers out there. People, you can do it. I believe in you. All right, everybody. We'll see you next time. Jeff, I'll see you next time too.
Yeah. Thanks, everyone. See you later.